A very good morning, everybody. Welcome to today's session. I hope you guys are doing well, and I hope you're staying safe. First and foremost, I am Emmanuel, and I'm your host for today's market section or market snapshot session that I do happen to host every Tuesday morning. So feel free to always invite a friend or two to tune in whenever we come here. Now, I would like to just pass through a disclaimer that this session is not financial advice, basically me sharing insights, and you can feel free to use them to the best of your abilities or in whichever way you feel that can be able to assist you in your analysis or to supplement or complement your analysis. So in just about or two, we are going to kick off and just need to give a few 1 minute for people to join in, then we can get underway. All right, so the morning we kicked off with the Japanese short-term interest. That was very early in the morning. So when you come and look at your calendar, so I always prefer to use the trading economics calendar because it's a bit more simplified for me, and I'm much more comfortable using it. So when you come to the trading economics website, gives you a lot of news, market insight indicators. So it's a lot of variety of things that you can always be able to use to supplement your trading as well. So particularly, we're going to look at the calendar. So you can always come into the impact. And you don't necessarily need the one-time impact in most cases. So you can always have this, customize something like that. So let's see where the BOJ rate decision. So the article that we have based on this is a very simplified one and says the Bank of Japan kept its key short-term interest rate unchanged at 0.5% during its June meeting. That was today, early morning's meeting, maintaining the highest level since 2008. So this is the highest the interest rate has been, and they happen to have maintained it or it remains unchanged. Usually the banks do this when they are not sure of the financial data or they are still gauging how the economy is actually doing. So when they tend to do this sort of keep them unchanged, like you've been seeing the Federal Reserve has been doing in the US, because they have been saying they haven't yet got enough data to assess the impact of tariffs fully on the American economy. So this is one of the moves that a lot of these institutions tend to take, and the Bank of Japan, its short-term interest, it's taking the same exact route. So this is basically the major event that happened in pre-London session. Going into other two-star events, news events for that day. Just a second. So all right. So looking into the news events that we may have through that day, we can say at 3:30 we do have the retail sales that will be coming in at 3:30. So that's one thing you want to look out for going into the New York session. This all are retail sales, business inventories, month on, month out. Yeah, so basically for it, this is what you're going to be watching out for during the day. On the other hand, we do have the conflict that has been going on between Israel and Iran, and it's what's sending shockwaves across the markets and across the different economies. So apparently, what you want to be doing is to be careful when you're trading, especially commodities like gold, when we are looking at these kinds of wars. For now, America hasn't been impacted directly, but we all know that America does hold a strong interest in Israel. So if at any one point any of America's interests have been or it gets highly involved, in the current conflict between Israel and Iran. In case that becomes a bit imminent between Israel and Iran, then we are going to see gold give us a reaction. If it negatively impacts the USA, then we are going to see it send gold to the upside. If America remains safe, we can see gold probably still trying to correct or push to the downside, as we have been seeing some kind of bearishness coming in from Monday and then today as well. So besides that, I think that's what you have from the new sector. We are going to rely a little on our technical analysis for now, and then we can be able to look for those market opportunities coming through in that day. So let me just share my chart. Okay. All right. So I think let's start with the US dollar index. Let's start with the US dollar index. So if you're an FX pesa, so it's USDI. Let's just add it into this. So this is how you add our pairs on our MT5 USD. Then it will be index. So this will be the US dollar. So this basically just shows you what the dollar is looking like during the day. Expect it to be strong all week. Then you can now always be able to reflect this analysis onto your currency pair that has the dollar or that is paired with a dollar. So let's look at let's look at this. Let's use this, I think. Yes, so now it's the dollar index, and I like to bring this up from the daily time frame always. I tend to like to bring it from a daily time frame. So from here, what you can see, we have limited data on the dollar index, but you can see from here, we did have from last Friday, we had a bullish move yesterday. We did see it try to move to the downside, then it gave us a very nice correction. The upside gave us that doji candlestick. And when a doji occurs like this, it doesn't necessarily mean a reversal. It just means we had some kind of selling pressure. But before the day ended, the buyers were able to come and then reflip to the upside. So this can be a good bullish sign, especially if we see a lot of momentum coming in the New York session to the upside. Then you can expect the dollar index to push all the way to the upside. So we have a supply level right over there that price may want to come to over time. So unfortunately, the chart looks like this because the data on the US dollar index is a bit limited to a few days. So you can just see this like 2 days for the week. So it's refreshed every single week. So you can see data just for about a few days, a few hours on a 4-hour time frame. So it's something we'd like to see. Probably we can see a correction push all the way to these areas over here. To these next structure areas, we can see that price has come off a demand level. It's pushing to the upside. That's trying to push in for some bit of what we would call dollar strength. Hopefully, if American interests in the US, in Israel, sorry, don't get targeted by Iran. That will depend on how much involvement they actually have in the Israel conflict, in the conflict, or in motivating Israel probably to attack, as the media says. So this is the demand level. We can start to probably push price to the supply level that's over here in purple, and that's something we really want to watch out for during this week. So it's a dollar index. So we're going to just couple this up a little bit with a few dollar pairs, just to supplement the analysis we're having here. This on a 4-hour time frame. So what we'd like to see, prices come from a demand level, and let's just see from a lower time frame, the other areas that you may want to come back to. So what you'd want to see here would be definitely a buy. Let's look at our buy levels. If price breaks above these areas, you would definitely want to look for buys, continue to the upside. So if we're in the London session, these grid lines are representing the data that you would expect to occur in today. So if we're in these grid lines, expect a breakout of this area, probably a retest, then a buy to continue to the supply levels up above that. But consequently, on a lower time frame, because this is still a demand level over here, we can see price probably I can still be able to retrace to this level over here. If you have a inner, or what do we call it, a smaller structure demand level, I think that term can serve it. So you can have this over here. We can probably also see price come to that particular level. Let's just change its color. Let's make it what color? Let's make it orange, I believe. Let's make orange and see. So this is dark orange. So you have this level, and intraday perspective, we can see price probably break below these lows and then push all the way to this demand levels. All now these are levels that we expect to be hit within today's sessions. Right now we are in the London session, so we'd like to see how it goes. But usually we saw a breakout of this level, a breakout of this level. I would anticipate price going to push towards this demand level, and then thereafter push all the way probably to the upside. And it's on the dollar index particularly. So let's try to couple this down up with definitely some analysis on our US dollar pairs. So if so when the dollar index is going to the downside, that means the dollar is weakening. You'd expect pairs like GBPUSD, EURUSD, or USD, what other pair, NZD to probably be buying. And in case the dollar becomes strong when it comes to this demand level and then starts buying, you'd want to sell US dollar pairs that are like GBPUSD, EURUSD, NZD those that are inversely correlated to the dollar index. So let's kick off with I think GBPUSD. Where have it? Okay, now let's see. All right, so these charts, I think they are too bright. Let's just get it to this. Okay. All right, so this is on our uh, British pound and the US dollar. So some people prefer to call it cable. If you hear somebody referring to this pair as cable, basically means the British pound and the US dollar index. So let's just look at objects. So you can see that price still leave a demand levels was going to the upside over here. We have been seeing some bullishness for quite some time, ever since, of course, Trump announced the reciprocal tariffs. We did see a drop on stocks, a drop on the dollar index, a drop on their bonds as well. But we did see the British pound actually move to the upside as well as Euro USD. They began very strong uptrends then, and we can see up to now price is still trying to give us what they call higher highs and higher lows. So when you look at the most recent price action, this is on a daily time frame. We do saturate this demand level over here, and of course, a candlestick from last week's Friday came and tapped into this. So let's try to look at what areas in the demand level were able to hold price. Then we see where price would be trying to push towards, or what areas you can be able to watch, right? I believe that would make sense at the end of the day. So we did have this big demand level, and we can see that below these areas here, we do have areas or demand levels that have been consumed. So when you look at areas that have been consumed, those are the ones that have been mitigated in smart money language. We did have this demand level, price came and tapped into it and triggered this bias to the upside. Then we do have an area right below that. You can see this area below this, that price as well wasn't able to come back towards, right? So we can refer into this area here. Basically, because this demand level here, these two small red candlesticks you see, they make up a demand level. Some would call it an order block, but still a demand level at the end of the day. So these areas were responsible for the breakout at this high over here. So that means that it's a demand level would really want to watch in case price comes back to it. So now looking at what we'd like to anticipate in terms of trading opportunities. Now this on a daily time frame. So we're going to first look at demand levels below, because you know that in most cases when price is going to the upside, it's going to first come down sometimes to pick up liquidity. So we want to look for areas below price where price will definitely go, and these are areas of interest, move to the upside. So if I come onto this current price action, I'm looking at the demand level here. So I'm going to just change its color as well so that it can probably blend in. So let's have this, I think, probably at something like light green. Yeah, I think that's visible. So we're going to have this area. So you like price to come into this and probably look for buys within this area. So it becomes a bullish area of interest. And just in case price happens to break below this area, this is a 1 hour time frame. So let's look at the range that price is offering us to the downside. So one other trick you would really like to use is to probably trade within sensible ranges. For example, if this is a GBPUSD, I need to have about 40 pips on this. So you realize that these are about 39 pips, which means you can relatively still look for some sells in case price breaks below these areas. When you're looking at intraday perspectives, right? If they are 40 pips range, definitely price can give you some retracements and you can't fail to get probably about 20 pips, which are very good intraday pips. You can always be able to capitalize on those and make some money off of them. So this is a buying area, but if price breaks below this area, you're going to look for those sell opportunities. So one thing you want to understand, there's a saying that says that the best bullish setup is a failed bearish setup. So usually when you let's say your bias is bullish, but then your bullish area fails, in most cases, price is going to use that area to go to the opposite direction. Because in most cases, if your analysis was right, as well as want to be, if your analysis was actually right, then that means when price violates your analysis, it has entirely changed direction. So now let's look at the upside as well and see what possible areas price would offer. So here price would offer us, they would look like they are fewer pips. I want to look at the most recent intermediate highs. This is a 1 hour time frame. So usually I'm okay getting resistance levels in the 1 hour time frame, right? So in case price comes and breaks above this area without coming to the demand level. Now this is in case price comes directly and breaks above without going below. You'd want to have a retest around this resistance and then probably a buy to the upside. Now, given the fact that price has been bullish and it's coming from a bullish area of interest, then if the range here is little, remember you'll be focusing on moving with a trend. That means you're going to project price to go and create new higher highs above the old previous highs, and these are about 53 pips. So this would be more like a retracement that you've been into. So you're going to be targeting the previous highs for price to go and create a new higher high. That's the way you really like to approach when you're trading with a trend. When I'm trading against a trend, for example, if price goes and breaks below this, the next bullish area will be my target. But when price is moving in the same direction with a trend, for example, we're bullish here, and price happens, let's say, for example, to break out of this area here, I would anticipate it to give me a retracement. But now my target will not be a supply level like this one or something like like a bearish order block or a supply level. That would be my target because I know I'm moving with a trend. I would want price to come and take out the previous highs because I know that on that higher time frame, price is probably forming higher highs and higher lows. Now that's something that you want to take into consideration when you're doing setting targets or looking for profit level areas. So these are areas that are probably a bit of bearish, that are like bearish supply levels. These act as your take profit levels in terms of partials, right? It's always good to take partials in most cases. You can have this as your level where you're going to take, let's say, for example, TP1. Then you can have this, you take some more partials, then probably over take profit a few pips above the previous high generally. So that's something you really want to look out for when you are setting targets and take profit levels. It's how you can approach it. So on this perspective, we would like to see either price breaks above retest and buys, or price overall comes down into these demand levels and then probably gives us those moves to the upside. Anything happening below this area, in case price happens to violate that demand level, then our next target will be at this orange line, and that's at about 1.34942. In case price breaks below this area, because you have a good tradable range, because it offers 40 pips, you can probably target about 20 pips within that range as well. So there are two perspectives you can have, actually three. We have a breakout and retest, then price pushes up. We have a move to the demand level and a buy above. And worst case scenario, price definitely breaks below this area, continues pushing to the downside. So this is on GBPUSD. So now, when we speak of the alignment, we look at the US dollar index, right? And on the US dollar index, our analysis looked something like this. We said price can definitely probably push to the downside, then push to the upside, which can also in turn mean here price can push to the upside, then push to the downside within the supply levels, just in case price breaks above this level before. These areas you really want to watch out for, just in case of anything. So let's move a bit still on one more Euro USD pair. This is Euro USD. Let's just get to the chart. Let's move the template to this. So the pair, okay. So let's just look at this. All right. So this is Euro USD for the European dollar and the Euro and the US dollar index. So what you can see here is still very much bullishness. But remember, when price is bullish, you can always offer some room for retracements. The price will create a new higher high, then can come and create a lower low. And for price to retrace to this area, there have to be conditions you're going to want to look at. So what you're going to do, you're going to mark out the highs that price has created, or the current higher highs, which are these levels over here. Then you know that our price is either going to break out of this area, then retest and continue, or it's going to come to the demand levels, then buy to the upside. Now, this is just a resistance area that would like price to break out of to continue with our trend. Remember, the idea is to play along with our trend. We would like this to probably break out and retest, then continue. Or on the other hand, we would want price to come to the demand level and then push and take out those previous higher highs to create new higher highs. So refining these levels for 4-hour time frame. When you look inside our daily demand level, we're going to find we may have one possible area of interest, and that is this particular area. So in case price is to retrace, this is the area I would want our retracement to end, because the most viable demand level, or what we call an order block as well. On the other hand, price is currently within the demand level, and just in case price has enough liquidity, it's able to use this demand level probably to break above the resistance we have, so you can refine its resistance to these levels just to now these are called refinements. You're definitely just now going to lower time frames to try and refine your areas of interest that you're going to be watching out for. So now you realize that the more we refine, the areas become smaller and a bit more precise when you're doing your analysis. So coming down to the 1-hour time frame, so we always like refining our demand levels to the last possible area, or the last engulf, which was this. So this is the best possible buying area intraday, and probably can push price all the way above these resistance levels and continue to the upside. But this area you'd like to buy from. Anything below this, let's just see. All these areas here have been wiped out, and you can just have some bit of a technical aspects to try and aid you just in case. You don't have a clear breakout of this area here. You can see price tries to close below, then goes right up above it, and giving us some kind of rejections on that particular trend line. So it's very unlikely for price to just sell from there unless it breaks below this support level. Then you can move all the way to this area there. But beyond that, this on a 1-hour time frame. So beyond that, we really like a breakout above the resistance in order for us to look for more buying opportunities. But now we're going to watch the area below here as the best possible buying area. Let me just add in a text. This is the best buy zone. So it's a possible buy zone, right? So it's just a possible buy zone. I thought I had put in a text here, but apparently it hasn't. So this would be an area you'd want to watch out for. This possible buy zone. Then sells right below that level there. And you can look for sells below this area, below this support level there. Then of course, other continuation buys would want to be above this particular area here. All right. So anyway, as long as we get the point. So above this area, I would want to look for probably buying opportunities on your USD around that. So That's the idea I really want to have from here. So I think why I'm taking the area above there is because I feel like the ranges here are very, very short, and it's not really ideal for us to look for opportunities within them. So moving away from Euro USD, let's look a bit now onto the bit of the more complex stuff. Let's look at gold for a minute and see how this would happen. Let's look at gold. Now this is gold. Let me just change my chart. So now gold, ZAR USD. So I still have to come from the daily time frame. Gives me an easier bias. So we can see that we did have a selling day yesterday. After we saw that last week, our gold failed to create new all-time highs, though it was really looking like it's it was very promising on creating new all-time highs, but then it was unable to. So we have seen this week start up with a correction, but the correction there does not change the bias we are having. Or doesn't change the direction of the trend. The trend is still bullish, but as I mentioned earlier, our price will always give us our retracements as far as structure is concerned. So look at this structure. We have been, we saw we had a low, then a high, then a lower low, higher high, lower low, then a higher high. And what you're focusing on is just this bit of price action. Just look for an object that used to. Okay, so I hope this is the right tool. So just looking at this bit of price action from down at the bottom here. And look just at this price action. You can see price was forming high, low, higher, high, lower, low, higher, high, lower, low. So what would we anticipate? Price breaks out from this point, create a new higher high. So we'd anticipate a retracement in order for price to continue forming new higher highs. And as long as the war continues, this is one of the things we are going to probably anticipate, because you know that investors will want to run out of some major currencies, try and look for this safe haven assets. The question is that where are the areas where we want to position ourselves to look for those buys? So apparently right now we can set the momentum at the bearish side is very, very much. You can see that we only have on the 4-hour time frame, only have 1, 2 bullish candles. So the one thing you don't want to do, you don't want to fight that. You never want to fight that. You don't want to fight the current buyers. So what you want to do is either look for selling opportunities on low time frames, or to look for the areas where our price is most likely going to sell until before it looks for proper buying opportunities. So look at these areas here. This area, all demand level already been mitigated and has failed miserably. Then we have now this demand level here. That's the only fresh demand level that we have on this time frame. So we're going to focus more on refining this demand level. Why? Because this demand level aligns with a general daily time frame trend, which is bullish, even if we are currently in a retracement. So we find this area, then we are going to look at areas that we'd like to focus on, what reactions we want to see in the markets in current time to look for selling opportunities, probably push price all the way to this possible that the best demand level or the best buying area. So the first things first, we refine the demand level here, and then look inside this demand level. We do have a small kind of area that it must you can spot right over there. So we can say that this demand level is responsible for the breakout at this point, right? If it's responsible for the breakout at that point, it's going to be our area of interest, and this is on a 30-minute time frame. So we can mark out that demand level over there. So when you mark that out, we can now look at the current bit of price action. So here what you'd want to see is look for areas that price will definitely break below, and you see if you can be able to capitalize on a few moves on that particular trade. Now, given the fact that the trend is bullish, it's not a must that price always comes at demand levels. Price can always choose change from a specific area. So when you have this trend line, it's one of the guidances we are going to use and probably see if either price uses this area to push. Right. Either price uses this trend line to push to this area here. When you look at the range on this, let's see if there are some opportunities you can get. These are about 250 pips, which are very good range. So we can see in case price able to give us some good opportunities below here, then we can definitely expect to take those few pips from those sales or the selling opportunities that may avail. So as far as the resistance level, sorry, the support level, we are going to use this as our resistance level because this was just a rejection and price happens to close right above that support level. So we want to break off this area, probably a retest and a push to these levels here because the pips are within this are very appetite. They are very, very enticing. There's a very good range below that that you can be able to capitalize on and take some opportunities within. In the meantime, in case you have any questions or anything you'd like to find out about, kindly feel free to put that question in the comment section, and towards the end of the session, I'll be glad to actually answer your questions or to look into those whatever you would have put for me in that section over there. So this is the perspective we're having on gold, but don't rule out the fact that we can also still have buying opportunities showing up in case price definitely breaks above our resistance and gives us a good area that we can, of course, be able to confluence with a breakout. Probably something would look something like this. Let's see. You don't want ever. Let's say if price able to break above this area, probably retest or retrace, then you can look for opportunities within that. But that is a long shot. So right now we work with what is available, but you can watch those areas in the meantime on gold. Those are the perspectives we really want to see and how they will tend to affect the markets today. Sorry. So all right. So away from that now, let's go and look at GBP, JPY, or the Japanese pound. So the British pound and the Japanese yen, which is one of the favorites of very many people. So I'm going to just get a much more common. Okay, this will work for us. So what are we looking at on GBPJPY? It has also been a bit bullish in the recent days, as you can see. We did have a very, very aggressive Friday that went bearish, then was able to almost recover the whole move to the upside instead. So this is a GBPJPY and daily time frame. So that's the momentum to the upside is very, very good. And the one thing you never want to do is to fight that trend. You do not fight the trend. So the trend should be your best friend time and over again. So what do we see here? Price has a breakout, a retracement, a breakout. This was the area responsible for the breakout. Then that becomes our demand level. This became our demand level, as you can see with the bearish candle this time. And you see that most of our areas are engulfed areas. So price just taps into that and looks like it's set to continue to the upside. So let's see from lower time frames, we can be able to see some perspective of jumping onto this trade and probably riding the wave along. So judging from what I'm seeing over here, I would really expect price to first go lower for a bit of time. Probably first push to this area to be my best possible scenario. For price to push down here, then I can look for the best possible buy areas within this zone. It will be around that zone. So this is best possible buy areas. So this is something I really want to watch out for. And then probably in case some price doesn't happen to take that alternative, I'll definitely want to look for this trend line that is moving here beautifully. price will definitely probably break above it, then retest, then push continues to the upside, or that push continues all the way to upwards. So besides that, if I'm looking for sell opportunities, they'll only come below my demand area over here. So now I'll now try to anticipate or try to factor in the possibility of sales to the downside, because as far as I can say, I don't really have any significant demand levels that are most definitely showcasing from that area over there. So this is GBPJPY, and this is my perspective I'm looking at. So one other thing I think I'll look at now is the CHF. This is the Great British Pound and the Swiss franc. For the case of this particularly, I think we did have some opportunities that came in last week. Someone did ask about this pair, and I know it's played out beautifully. So what can we see from here? We did have a breakout of this area. So now, in most cases, when the candlesticks look like this happens a lot on cross pairs. So what you want to do sometimes, just to have a proper, clear perspective, you really want to use your line chart, right? And when you come to your line chart, what are you going to notice here? We do have this kind of zone that was acts like a key level. You're seeing this carefully. This zone is acting like some sort of key level. We had a resistance here, price breaks above, retests the first time, retests the second time, breaks out, and looks like it has just retested once again. And what you anticipate from here, you'd anticipate price most definitely has areas it would like to go for to the downside. Now, what possible areas would that be? When I come on my daily, I can see we have a demand level at this area over here that price could possibly want to go all the way towards. So now, how do we align this with our lower time frame? So now that we start up price is likely going to try and achieve that, we can now go to our 1 hour time frame and look for what key levels or what key areas of interest price may have to violate in order to be able to achieve its overall objective of going to that daily demand level on GBPCHF particularly. All right, so looking at this, we can see that price, of course, the sales were initiated from a very nice demand level as well. Price was retraced back to the demand level, then pushed the downside. And right now, when you look at what price is doing, we do have a breakout of a trend line, which is a good sign, especially when it comes to reversals. This trend line break is a very, very good sign. Now, what you can pay attention to is what areas are aligning around the trend line break. And when you look at this carefully, we actually do have nice supply levels right over here. So I'm going to just change their colors. So I think let's give this red, not black. Let's give it a bit of blue. Not okay, blue is really there. Wow. A bit of dark green. So this area looks like black anyway. So this area, then area will really want price to push back towards and then continue yourselves to the downside. In this particular perspective, anything about buys, I would actually want to look for them on this particular pair because my bias has pretty much flipped to the bearish side in this particular case. So this as far as the pound and the Swiss franc is concerned. On the other hand, let's look a bit at GBPNZD. It's one of the classics, one of our favorite pairs. So let's look at this and then what else we can have for the day. Okay. All right. So this is our GBPNZD pair. So it's a cross pair. So usually the price action can look a bit tricky. When I come to my line chart, I think I can see are these are very, very easy. You can easily see that. What else can we see from here? Usually I'm using my charts, for my line chart. Easier to use technical tools, especially the trend lines, very, very easy. Then when I come onto this, you can now sell price trying to respect those zones. So the question here would remain, what zone do you think price will break at the end of the day? So I'm going to look at the most recent price action. So we have 2 days. that look like they have a lot of bearish momentum, which means price is most likely to break at the downside. So what you can see here is that price is actually ready to break to the downside. Though better still, it's within a demand level that will also still hold price. Worst case scenario. So what we're going to do is you're going to watch these levels here. This is like a left shoulder, it's like a head. Then now price has again put into this, what they call the quasi-model areas. So the quasi-model looks like a head and shoulder, but usually is not. Slightly different. So right now we can see a QM level over there or a quasi-model level, and price hasn't yet got into it. That level is going to be our anchor for the current price action. Either price breaks below it, tests and continues selling, or price will go into it, forms a confirmation, and then starts the buy from there. So there are two perspectives you're going to look at when it comes to entirely looking at the QM level, trading with a QM level. It's one of the very best entry models you'll ever find out there. So that's pretty much just about it on GBPNZD. Once this area holds price, you can see a push to the upside. Definitely here will be a take profit one, then probably above that take profit two. Price breaks below this, you know you're going to have probably take out all these lows and come all the way to these demand levels, which is a pretty good number of pips that you can look out or look into. So this as far as GBPNZD. So we're going to okay, let's see. Let's look at one index, then we can look at the questions. This is what I've been having as the dollar index still. I'm looking for UT 100 row. So this is NASDAQ on NAS 100, right? So let's get on the daily time frame. So we had a very bullish Monday. As you can see, this candlestick was really crazy. So you can see price came from a demand level, of course. Price pushed into a demand level to the extremes. Then yesterday we had a very bullish day that actually literally engulfed the previous day's candle, which was last week's Friday. Yeah. So today we expect, of course, see the price going to form down week or the bottom week before it pushes to the upside. So right now we can say price action is bearish, which means price is definitely trying to formulate entry areas. So what do we see here? Price came to this demand level, and right now we want to see our best possible buy areas. So our best possible buy areas are going to be dictated by our first thing we're going to look at is areas price can definitely break out of and then retest. Give us buys, we can say there are two areas that reject this price zone. So let's just it on this, making this a good resistance level. So it can be a breakout, a retest, and a push to the upside. Then we are going to look for areas of interest that can easily support price or hold price and push it back to the upside, right? So look at this, we have two areas only. We have this very small level, the miniature level, then we have an area all the way to the bottom this side that is still fresh. That means from this area, in case price breaks below this area here in the middle, then it means you can sell to the downside, because I believe this has a very good range. They're about 389 pips, which is a very beautiful range. Of this NASDAQ as well, so the pips are calculated differently because the figures are really so many. That's about those pips over there, about 380 pips. Yeah, 387 pips. Price push that area, so you can be able to capitalize probably an average of 100 150 pips, which will be very good for you as well. So this is another 100, and this is the perspective I'm having. So in that note, I'm going to just look into a few questions, then we can call it a day from there and see how the week goes. So questions that I can go through in about a minute or two. All right, so analyze BTC2. Let's look at BTC. And there it is. So of course, the daily time frame is a classic. The one thing you want to always want to use. So wow, we had a breakout from here. Like this breakout, then you have seen that retracement and now price pushing to the upside. So what they anticipate are going to create new all-time highs. Yeah, eventually I believe you're going to create somewhere within this month, most definitely, according to the price action I'm seeing. Yesterday was a very bullish day. Today it's just a correction day. They can even close bearish, but I expect that I don't think that will be possible for it to close strongly bearish. It can be a bit bearish. Why? But I expect that's because our demand level is all the way down here at Bitcoin. This is the area we really love to buy from overall. And all the way down to the downside. I expect price to continue pushing to the downside, at least until that area, then it can push to the upside. But remember, the market is not fixed and price can still do what it wants, can still decide to break out of this area. We just then continue to the upside because the modules are pretty much the same. It's just the perspective of the buyers that may differ a little bit. So that's something we can watch out for when it comes to Bitcoin USD. So I would like to buy from here. Anything below, I would like to sell. In case price doesn't get to my buy area or in case I miss it, I would want to buy above those lines.